Hi there and welcome back. In this video today, I want to walk through what the accounting cycle is and why accountants have to be aware of it. So with that, let's get started. Thank you. Hi and welcome back everybody. Today in this video we're talking through what the accounting cycle is. This is a term that you'll hear often in accounting classes, and I just want to describe a little bit of what that means and why it happens. So the first part of the accounting cycle is just what happens in a given month or period. In a previous video, I've talked about the fact that companies will set up their fiscal calendar, their fiscal year, based on either calendar months, or they will have these predetermined 4-week, 5-week cycles. And it's during those cycles that transactions will happen, and so they're being collected during that period. And those then, as they are transacted, they eventually end up in the financial statements for that period. Most of these transactions will happen automatically, and as they occur, they post to what is called a general journal. And that's just a collection point that sits in the software systems that collect all these hundreds and thousands and possibly millions of transactions. Adjustments could occur automatically, or they may require some human intervention. So during a month, sometimes, and I'll use the example of depreciation expense on a piece of equipment or something. A lot of times those things can be set up, depending on the software system, they can be set up to be transacted automatically every month, so somebody doesn't have to manually sit there and actually calculate it out and write out the journal entry, etc. And so those sometimes can happen automatically during the month. The second part of this cycle is what happens at period end. So at period end, accountants spring into action because they are now trying to close the books. And one of the things that they do is they will run a trial balance. And what this is a list of all the accounts in the chart of accounts, and it has the balances that are calculated on those accounts. So I'll take the example of cash. Cash is a common account that sits on anybody's chart of accounts, and that cash account can have lots and lots and lots of transactions that have gone through it. But you add all of those up, and the software can do this really fast, and all those transactions will be added up, and hopefully at the end of the day, the balance in that account will be a debit balance of whatever amount it is. And so accountants are looking for those accounts to have certain types of balances. So let's say that they had a cash account and they saw that it had a credit balance. Well, that is incongruent to the rules of accounting. And so the accountants need to be able to notice that as a possible error, and that would be one of the things that they would look at month end, of like, why has that account gone into a negative or a credit balance? So they would look through all those transactions and do a reconciliation or just do an analysis of that account, trying to figure out, why did it go into a credit balance? And they might find that some sort of error occurred, or some sort of processing error occurred, whatever it is, and then they would fix it. So they would write an adjusting journal entry to make that correction. So at the end of a month, accountants are doing all kinds of different manual adjustments, and they're running these trial balances over and over and over again. So you will hear of trial balances and adjusted trial balances, but basically all it is just a trial balance. And as adjustments are made, they keep running these trial balances to make sure that they feel that the accounts are all accurate and clear of error. From there, financial statements will be prepared, and then closing entries will be done. I'll go into a lot more analysis on closing entries and specifically what those do in a later video. So an accounting cycle, for most companies, a lot of this stuff and a lot of the transactions that happen are automagically done through the power of computers. And computers today allow companies like Starbucks and Georgia Pacific and these really big companies to be able to get as big as they are, because without these computers running a lot of transactions through them, companies like those would have to hire lots and lots of accountants. But at least, they don't necessarily have to do that. So most of the human intervention on the accounting cycle has to do with things or processes that software just doesn't handle. And there are certain things like that I have never seen software be able to do, such as, and we'll go into this into a later video, but a lot of times, companies, because they're multinational and they're sending product around the world, sometimes you have to clear out what's called profit in inventory. And I have yet to see a software program that will actually clear that out for you. Accountants actually have to do that manually. And there are just manual adjustments that have to be done by hand. And so sometimes software does not handle things like depreciation expense being done automatically. And so you'll have to do those by hand. So at month end, as that process is happening, no new transactions will hit that period. So if we're working on the May closing of the May period, then no more automatic transactions will actually hit that period. The only transactions that would are transactions that are coming from an accountant who is having to do these manual adjustments and journal entries. And so at month end, so if we're at the end of May and June, we're on June 1st, then June transactions are happening and they're falling into the bucket for June. But any May transactions, all of that has stopped, and they're holding those temporarily as the accountants are making adjustments. And when we're finished with doing the closing entries, then we close the month of May. And that is closed for any further entries. Nothing else, even from an accountant, can go into that period. So I hope that helps you to understand really what the accounting cycle is all about and kind of the overall steps of what it takes to do that piece. And if you have questions, please feel free to leave them in the comments down below, and I will talk to you on the next video. Thank you.